David Burrows from Barometer is here on this edition of Market Call. Hello again, I'm Michael Hainsworth, in for Andrew Bell as we talk today about North American large cap stocks at 1-855-326-6266 and Market Call at BNN.ca. We got Ali who wrote into you about Amazon.com asking if she should buy at these levels.
Okay. So look, Barometer is focused on trying to identify secular or structural themes that can benefit certain industries and companies over a long period of time. And clearly, Amazon is right at the heart of one of the most important, which is online retail. This is a holding that we have and have had for quite some time. I've talked about it many times as a top pick. And my view has not changed on this. It is an expensive company. It's incredibly disruptive. It's not going to stop disrupting anytime soon. Stocks had a little pullback from $1,080 to $967, $68. The trend is very clear higher, and I think they have lots of opportunity to continue to disrupt various industries, but it is one piece of a portfolio, right? And you have to remember, in any company that is driven by earnings momentum and price momentum, there's always risks. So you have to know where you would exit if it winds up going south on you.
What's your take on the critics' argument that the bigger they are, the harder they fall? At the end of the day, it's still not a profit-generating company. It's a $1,000 stock. It's getting into so many different areas. At some point, there's got to be a stumble.
Well, it hasn't really paid to bet against them to this point. They are executing extremely well. If they wanted to make more money, they'd make more money, right? They keep those margins low to be highly competitive to go out and drive. Look what they've done with Whole Foods, dropping a bunch of prices by a significant amount, and they're just beginning there. They have an incredibly low cost of capital, and they have been able to deploy it and disrupt a bunch of industries. I wouldn't want to bet up against them right now. I continue to be long internet retail, short bricks and mortar retail. And I don't think that is going to reverse anytime soon.
Thank you, Ali, for joining us via the mailbox. We're off to Montreal now. Chris, thanks for holding. Hello.
Hi, Mr. Ainsley. Thank you very much for taking my call.
Thanks for calling.
Mr. Burrows, I'm calling about Allergan. The stock has been crushed. It's down $35 over the past month. I own a small position, and I was wondering if I could top it off to 5%. I know from your previous appearances that you don't like negative price momentum, but I'm just wondering what you think about the stock and what you think is ailing it right now. And would you be a buyer at these levels? Thank you very much.
Okay. So, Chris, base case is we are in a structural bull market for equities. And the great news is there's lots of people who are skeptical, and positioning is really not very aggressive. And we're skating through the two toughest months of the year with very little volatility. That's a really good sign for the fourth quarter. So you want to be positioned in equities. Healthcare in general is doing a little bit better. Biotech in particular is doing better, some of the hospital providers. But it's a mixed bag. And so the point I want to make to you on this is there's lots of places you can make money right now that are being rewarded. I'm not sure you want to buy a company that's been put in the penalty box. So my suggestion would be, focus on those companies that not only are executing fundamentally, but that are technically sound, because stocks that have broken down have an army of people waiting to just get their money back. So there's sellers that are built in. And I would prefer to stay in some of the stronger technical names, stronger fundamental names. So, for instance, a J&J or a Celgene would be more interesting to me.
There you go, Chris. Thanks for joining us from Montreal. We're going to stay there via the mailbox for Craig, who wrote in about Linamar, looking for your thoughts on a 10-year investment in the auto parts company.
This is a really tough question, okay? Because Linamar is a great business. They're great execution, great at execution. They've built a great business, and stock's acting pretty well. We like the auto group right now. Because there's a consensus that we're at peak auto, but there's improvement happening in Europe. There's improvement happening in various parts of the world. The short run is, if I was a Linamar shareholder, I would remain a Linamar shareholder. If I have a choice, though, I probably would buy Magna over Linamar. Remember that Linamar is in drivetrains. right? Transmission's a huge piece of their business. 70% of their business is in the powertrain.
Are you implying that at some point that's a buggy whip?
Well, look, I mean, when we get technological transformation, it happens every cycle faster than the last one. And there are people who believe that we are moving towards electric vehicles. You know, the Chinese say they want to be fully electric by 2030, I think 2025 for buses. There's no transmissions in an electric vehicle.
Right.
So you have to keep that in mind. So I don't make an investment and look out 10 years to say I'm going to own it then, but I would say that that is a bit of a problem for this company, and they've got lots of time to work at solving it, and we'll have to see how it all unfolds. But at this point, you know, I could own it. I'd rather own Magna, because I think that they have a better, better long-term model, because they're really growing in an assembly. You know, they're going to be producing half the 5 Series cars. That business is growing and very profitable. I'd rather own Magna.
Why not back up the truck and buy BlackBerry with their relationship with Delphi? It's the QNX division.
Listen, you know what? They're figuring out where their niche is, and they have a real opportunity with QNX. But I like the idea with I like the idea of owning Magna. It's less expensive than the group, and an earnings growth rate of twice the group's earnings growth rate. They should grow their earnings about 16% a year out to 2020. The group's average is about 8 and change.
Craig, thanks for emailing in via Montreal. Market call at bnn.ca is the address. David Burrows is here, President and Chief Investment Strategist at Barometer Capital Management. We're talking about North American large caps. We do have a line open. You can call now, 1-855-326-6266.